Well, June is National Homeownership Month.
Toby Smith, SVP and Chief Banking Officer at SECU, joins us to discuss home equity line of credits, or better known as HELOC loans. Thank you for joining us, Toby.
Thank you so much for having me.
Yeah.
So the first thing you're going to say is that you can buy a home if you don't buy all those things on Prime Day. Is that what you're going to say to us?
Affordability is important.
Affordability, there you go.
That's a way to start. So HELOC loans, they're really gaining traction lately. Can you first explain what a HELOC loan is?
Yeah, HELOC is an acronym for Home Equity Line of Credit. In short, it's a second mortgage on your home. All right, a lot of consumers are confused about that. They think, I just have a mortgage and I got this line of credit. Well, it's actually a line of credit that actually is a mortgage, so it's very important that you handle it as such.
So where do they play into, how you structure versus, say a HELOC loan maybe versus a traditional second mortgage? Yeah.
The biggest difference right off the bat is that the HELOC loan is a revolving line of credit. Okay. And a lot of folks opt for a revolving line of credit because of the fact that the monthly payments are often lower, a lot lower than an installment loan. Installment loans are equal amounts to pay down the loan over a set period of time. The revolving line of credit typically has a minimum payment that's due that will fluctuate as you use the line. So the higher the balance, the higher the minimum. A lot of folks will opt for the line of credit because it gives them more payment flexibility into their budget.
Okay.
So how are these homeowners using these HELOC loans to invest into their homes and their properties?
Yeah, it's an incredibly popular vehicle right now for making those home improvements, putting new kitchens, new bathrooms. A lot of times here in the summertime, I know you got a pool segment coming up. Some folks are putting in new pools. A lot of things are perceived to add value to their home. Now, again, I'm not a real estate sales expert, but I would encourage folks to get the home in the position and the condition that they want to make them happy, but don't bank on that necessarily adding value to the home. Each case will be different.
And we was talking about the fluctuating, mortgage rates, fluctuating APR, all of it.
Yes.
Every time the Fed comes out with something, everybody's closely watching. But how do these keep homeowners maybe competitive?
Yeah, absolutely. The big thing to keep in mind is that the interest rates are such a key item. We talked about affordability just a little while ago, but it's really an important item. A lot of folks opt for using their home equity line of credit because coming out of the pandemic, they may have a first mortgage rate that is at 4%, 2%, 3% range. In order to give that up and get access to the equity in your home, you have to refinance that and give that rate up. Well, homeowners are opting not to do that. It's usually not a smart choice to just opt to get cash out and raise your overall mortgage interest rate up. Therefore, the home equity line of credit is useful because it allows you to have that flexibility. Many of them have an intro rate on them, right? For instance, at SECU, it's 1.99% for the first 6 months before it does adjust to a fully indexed rate. But like you said, the interest rate news and the prime rate going up and down, that will impact the rate on your home equity line of credit, thus impacting your monthly payment.
So how can somebody qualify for SECU's HELOC loans?
Yeah, it's really important. Just have a good idea of your home financial situation. And what I mean by that is understand what kind of bills you already have out there, and that should determine what kind of a line of credit you want to take on, right? The mortgage company, the home equity company, the finance company, they're going to generally qualify you for the maximum amount that you're approvable for, but it's really up to you to practice basic budget habits, right? Just because you have a $150,000 line of credit, be careful. It's like a really dangerous, powerful credit card that can get out of control really fast. And again, back to what I said earlier, it's a mortgage on your home. So if you cannot afford to repay that, that can create enormous hardships for your household. Be careful.
So in SECU, how do folks find out more information from you?
EQMD.org, please. We encourage everyone to check us out. There's a home equity landing page. More importantly, we can do free financial wellness checkups to even decide if the home equity loan is the right option for you to go down. The HELOC may not be the right option for you. Don't guess at it. Get some assistance. That's where our member advisors are there to help. So again, CQMD.org. Check us out for interest rates, and more importantly, just get some free advice on what to make a right decision.
That advice, don't be afraid to inquire. You never know what good things might come out of that one phone call.
Absolutely.
All right.
Toby Smith, thank you so much. We appreciate you joining us.
Thank you.
Thank you.